Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by Philan Academy. There was a kind of a very strong momentum, the 5% upside momentum that we have seen from the bottom, and from past two trading sessions we are seeing that mild amount of the wicks are getting formed, indicating the selling pressure, and this selling pressure is emerging from its previous peak areas. So on a historical episodes we have seen that 90,850 870 level has acted as a resistance multiple number of times, and this time also we have witnessed this. However, there is no breach of a support level that we have been seen so far. So underlying tone for the market remains in positive, but of course we need to be cautious after the 5% upside momentum and being at a very stiff resistance level. Nifty will be considered in a positive zone as far as it's sustained above the 19,500 level in a very short term trading perspective, because 19,500 level, if I see, it is the immediate support level that we have. So the previous cluster happened around this level. In a previous time also, prices has taken the good amount of the support over here. It has acted as in a resistance level long back, so it is in a pivot level for the market in a short term 19,500 level. So this is positive about this level, but for the further and strong positive momentum we need to see that the market to sustain above the 19,800 level on the high side, and then yes, we can see that market can scale up to this particular level to fill the gap, so which is around 20,100, which is what are near to the previous high levels. One more observation is that the market, if we see, it is broadly into the consolidation patch. Consolidation patch, the range is quite wide. So let's say this is a 19,800 or 19,900 level, and this is 19,200 level. The range we have seen. There are very few days, 4 to 5 trading sessions on the high side and 4 to 5 trading sessions on the lower side. The market has spent out of this range. Otherwise, let's say from this particular point to this particular point, so it was a 93 trading sessions. Prices has spent in the range of 90,250 to 19,900 level. Out of that 95 trading days, the 10 days are the one where the prices has moved out of the range, but majority of the portion prices spent in this range. So this is what a broader consolidation patch, and we are at an upper band of the consolidation patch. So to on the market to become on a fresh upside momentum, 90,800 level or 850 level need to breach. But yes, the sector specific, stock specific, there is a different stories going on. We are seeing that large cap has started to find some sort of tractions off lately, but the small caps are the stocks, they are continuously performing well. The heavy engine of the market we see, that is a Banknifty. Banknifty is not performing that much well. In this week, market is up by 1%, but Banknifty is down by 1%. So underperformance of 2% we can see. Whatever the upside momentum that we have seen, it has risen along with the market, but faced the regions at an 44,500 level near about, which is what in periodical historical reversals points as well. And from that, we have seen a kind of a declining momentum. If I draw the immediate trend line as well, so prices has broken this rising trend line on the lower side. However, at this particular point, index is at near to the support level. So 43,500 is level and 43,400 around the index as a support level. But if this level get breaches, that is 43,400 level, then we can understand the reason some sorts of more pain, and that can bring the index to its previous turning points around this particular level. So 43,400 level, it is an underperforming sector, but more amount of the negativity it will attract below this level, and on the higher side 44,500 is the resistance level. So outlook for the bank nifty looks like sideways to negative, and within a respective seat levels we can see that below 43,400 level we see a further pain in the index. In this particular week there are some sectors which has formed the all-time high level as well. So let's say there is a Nifty Pharma. So Nifty Pharma, after forming the bad trap scenario, so I will call it as a bad trap because prices has been into the upward momentum, then there was a pause has come down, but this particular downward momentum took a support near about by previous reversals point, and then afterwards we have seen the strong upside momentum. On the daily chart it will be very cleanly visible. So range breakdown, the false breakdown we can say, and then the prices are emerging, and today we have seen the all-time high level or fresh breakout after very good amount of the consolidation patch. So let's say for almost 70 trading sessions, prices have spent in this range, and there is a breakout in that. So pharma sectors has started to find the traction. Already mid cap and small cap pharma stocks are doing well, but the large cap pharma stocks are also starting to find the traction on the high side. So this is the one particular sector which is into the movers right now. And secondly, there is another sector which is in a kind of the bottom reversal. Nifty Pharma can be considered as a bullish continuation sign, and the Nifty IT, which is the top performing sector of this week, we can say that this is a bottom reversal pattern that is getting formed in this one. So let's say if I look at the monthly chart of it, so I understand my previous reactions connecting the tops, the trend line, it has acted as a support level. So there is my external and internal lines. If I connect within tops, so this is what the parallel lines that I see. Whatever the declining momentum, it has absorbed around this level, and prices given the breakout. On a weekly chart, prices has been under the range, and it is very healthy sign. Okay, when the prices are under the range, so this particular range has been there for almost 67 weeks. So more than a 1 year, prices has consolidated in this range. Prices has given the breakout on the high side. Prices retrace back to my prior resistance level. So there is an internal resistance level where there, so it has acted as support, and this week index is up by 4% within a strong bull candle. So little bit retracement can be possible, but now this particular index has been into the positive area. So let's say for a very strong support for the index is around the 31,500 level, and on the high side I will not fear this as an resistance level. Prices eventually can go up to 33,300 500 level. So to play out this particular thought, the ITBs or selected counters like Infosys, TCS, those are having a good structure. They can get a momentum, but this is a bearish, means bullish reversal pattern that we are seeing. Whatever the intermediate decline happened, prices has took a support at a long-term moving average. At a long-term moving average support, RSI was oversold, and prices started to pick up its momentum. So this particular sector becomes a buy on a retracement. Whereas the underperformance we have seen already, it is coming from the banking side. So these are the list. IT, realty continue to move on the high side. Auto stocks, they were under the lackluster period for some time, but this week we have seen that couple of stocks like two to three wheelers, ICE motors specifically, they did well, and we have seen the breakout in the auto space as well. But in Nifty small cap 100, you keep on seeing it, they will be under the means they are consistently coming under the top five from past several weeks. So small cap is the main trigger where there is a very potential momentum that we are seeing into. Now looking at a stock perspective, so as we have talked about the pharma stock, so here I will take the Dr. Reddy. So Dr. Reddy, the structure is quite fine, but it was consolidating. It was an underperforming stock so far, and with this underperformance for the 2 to 3 months, so this is a monthly chart. So 3 months around, prices come down. It took a support at my short-term moving average. Now I'm looking at a weekly chart. So on a weekly chart, I understand that prices has retraced back, and it was in a whipsaw. Prices has come down below this resistance level and then again picked up its momentum. But by the same time here, historically level, if I see, the price has taken support at a internal resistance level that has formed earlier, taking the support at a blue color moving average. And from past 2 weeks, we have been seeing the very strong momentum in this. On the daily chart, this is my falling channel that I see. Prices are all the way corrected down. My positional moving average acted as a support level, and by that time the RSI was oversold. And now I am seeing that my short-term moving averages are having the positive crossover. So this is what my combination, having the support at long-term moving average, and then short-term moving average crossover happens. So this gives me the kind of idea. This is what a positive momentum is happening. So same thing is happening in the Dr. Reddy. The prices are started to find a traction on this. So maybe 2 days as a stop loss I can consider, and on the high side my previous picks can be the upside potential for this one. Metal stock has also started to find some sorts of traction, and among the metals I was looking at in JSL, that is in a Jindal stainless. So here the observation was the price, it has a very huge base. So let's say, and this is one of my favorite setup, after the very huge consolidation patch, and when the breakout happens or intermediate supports taken up followed by the positive sign, so those are the good setups to look for. So originally this is what my broader structure, very huge base, it has given the breakout. Now prices on the weekly chart, they have formed some sorts of flag pattern. The pole is not that much steep, slow and steady, but they have retraced back to a support at my moving average. And this week I am seeing that the prices has given the breakout on the high side. It has retested this pretty moving average, and then we have seen the follow-up sign. So this is a good sign that I am seeing. On the daily chart, this is an ascending triangle that has formed. Prices has breakout, retested, and again the follow-up sign that we are witnessing in this. So this is a bullish continuation sign that I can see. So 500, when we were talking about that thing earlier, so it was a 490 level, but during the intraday it has risen up. So we can maintain a stop loss below this point, or we can take the half point as our accumulation zone. So whenever the expiry range candle happens, so I normally slice it up to the middle point of the range. That is what my accumulation range, and 2 days point as a stop loss, and I double it as my target level. So these are the two stocks to have an eye on. So whatever the discussions that we did from the market, sector and stocks perspective, that is for the educational purpose. See you in our next video. Thank you so much.